there's no reason to have proof coins unless you want a proof coin of every year that goes back to 1986. But if you're putting in $500,000 or $1 million or even $100,000, what is the point of paying 50%, 75%, 100%, whatever it is, more for a proof coin? Because you're not going to get that back on the back end. Just buy current U.S. Mint lineage bullion. Gold eagles, silver eagles. And if it's outside of an IRA for silver, hands down, 100% of the time, right now, you want to own junk. You don't want to own any other form of silver.
Good day, investors. Today, we dive into an eye-opening interview with renowned precious metals expert Bill Holter, who delivers a stark warning about the trajectory of the U.S. economy and the potential threats facing gold and silver holdings. Holter, a respected voice in the financial world, argues that the American financial system is teetering on the brink of collapse due to unsustainable debt levels and soaring interest payments. He highlights the Federal Reserve's growing $9 trillion balance sheet, cautioning that it could expand further as the central bank is forced to intervene more aggressively in the bond market as both the lender and buyer of last resort. This, he asserts, is pushing the economy toward an inevitable reckoning. Holter underscores the importance of owning physical gold and silver, describing them as critical hedges against financial instability. In a collapsing economic system, he warns, digital assets like bank accounts, brokerage accounts, and insurance annuities could be at significant risk. Holter's concept of the Great Taking suggests that these digital holdings may be the first targets of government intervention. As a result, he advises investors to take precautions, especially if they hold assets in IRAs. According to Holter, owning U.S. Mint-issued gold and silver eagles provides a layer of protection, as these coins are less likely to be confiscated by the government compared to generic or foreign coins. In addition, Holter discusses the importance of physical possession. He stresses that investors must be prepared for a scenario where access to precious metals stored in vaults may be restricted during a financial crisis. For those,
in my opinion, these vaults, what's going to happen when the system goes down, they're just going to close their doors. There's not going to be anything in and nothing out. You won't have access to your metal, but that's the same time you don't have access to your bank account. You don't have access to credit cards. Nothing's working. So obviously you want to have metal on hand. And the question in an IRA is, do you take it all out, have it delivered to you, and, take the tax hit plus maybe a 10% penalty? I don't really think that's necessary. The Great Taking, I think, is going to be largely, if not almost entirely, digital. I think it will be digital from the standpoint of your bank accounts, your brokerage accounts, your insurance annuities, things like that. And I think longer term, real estate's going to be taken because people aren't going to be able to pay their real estate taxes. So I think that's the bulk of the Great Taking. I don't think that they will go into, crash into vaults and confiscate, because they've got to physically do that. They can't do that with a push of a button. If you do hold IRAs, and I've recommended this now for years, you want to have U.S. Mint lineage coin. You want gold eagles. You want silver eagles. And the reason being, if you're buying a gold eagle this week or a silver eagle this week from the Mint, can they really come back next week and say, but you've got to turn around and sell it back to us? I think there'd be all kinds of lawsuits. I think within an IRA account, could they say gold and silver, or gold or silver are illegal? Yeah, they could do that. And if you own bars, if you own generic coin, those would certainly be subject to it, because it's basically raw and privately fabricated metal. Could they confiscate foreign sovereigns? Yeah, they could. Could they confiscate American coin? Yes, they can, but it will be much, much more difficult because it is U.S. coin. So I would just say if you hold an IRA and you decide that you do want to leave it in a vault, make sure that they're U.S. mint lineage coin. Now, as far as dealers are concerned, I guess the first and biggest red flag is if you ask the question, well, how much is this particular coin? And they give you a runaround and don't give you an answer, then you could be pretty sure that they're not on the up and up. I can tell you, Andy Schuckman and I did a little bit of investigation. This was quite a few years ago. This was probably 2015, 16, something like that. And there's one particular person that does quite a few interviews and is telling people to do the right thing. They're telling people that the pre-1933 gold is absolutely good because they're considered collectibles. They're not bullion, and they'd be almost impossible to confiscate. And with silver, they're saying you should buy junk silver. And I agree with both of those. The only problem is Andy and I, we called that particular company. And this is when gold was trading at maybe $1,200 an ounce, something like that. And we had MS63 St. Gaudens priced at $1,340, and we called in, and of course we got the runaround as to not wanting to give us price. But I pushed and I pushed, and I got their price, and their price was over $1,650, and that's because this particular company charges, on top of the retail price, they charge 26%. But people don't know that until after they send money, and then they find out. And I've had some people ask me about it, and they've immediately called and said, I want to cancel the trade, and the trades have been canceled. But to me, I mean, the retail price is more than adequate for dealers to do business, earn a fair profit, versus this particular company coming up with the retail price, so they're already getting paid on that, and then they bang you for 26%. So yeah, I mean I would say that is probably the number one red flag, is if they don't want to give you price.
Concerned about the risks associated with holding assets through third-party custodians, Holter suggests that it is vital to maintain direct physical possession of metals whenever possible. He specifically recommends avoiding proof coins, as their higher premiums do not guarantee proportional returns. Further elaborating on the risks, Holter mentions that although silver may be less likely to be confiscated due to its lower monetary value, gold remains vulnerable. The government, he suggests, could target mining operations as a means of controlling supply, particularly if the economic situation worsens. He also notes that the authorities might attempt to nationalize these resources as a method to stabilize the economy, especially if the debt crisis deepens and revenue becomes critical. Holter's approach is to remain cautious and vigilant. He believes that relying solely on digital assets or vault storage could leave investors exposed to significant risks, especially if the government decides to implement restrictions. He also advises separating the dealer, custodian, and storage facility roles to ensure transparency and prevent fraud, emphasizing that no single entity should control all aspects of a precious metals investment.
With an IRA, it could be just an outside trade that you're planning to vault. You always want to have, in an IRA, you need to have a trustee and you need to have a custodian. The trustee basically does your book work for you. and the custodian holds your metal. And you also need to have a dealer because you need to buy the metal. You don't want all three of those to be the same entity. You don't want to go to company XYZ who says, okay, we'll buy you X amount of gold or X amount of silver. It'll be accounted for by our trustee and we'll hold it in our vault. The danger there is your metal never ever got bought. They took your money and they're sending you statements. I mean, this happened back in a big way back in, I think it was 2000, I want to say 5 or 6, something like that. And I forget who it was. I think it was Payne Weber. And it was mega millions of dollars that they had, that they were storing for years and years, and they never bought the metal. And they admitted to it. They paid a fine. There was no prosecution or anything. They made everybody whole, but they made everybody whole because that's a company that stayed in business. If a company doesn't stay in business, it does something like that, you're out of luck for everything. You're going to lose it all. So you want to have a separate precious metals broker, a separate trustee, and a separate vault. Now, outside of an IRA, there's a lot of companies that act as the precious metals broker and the vault. You don't want to do that, again, because you got nobody looking over anybody else's shoulder. I mean, in the instance of the IRA, you've got 3 separate entities, and each entity is watching the other entity. If your dealer says, we sent the metal, and the vault says we didn't get it, well, there's a problem. But if it's the same company, you're never going to hear that, you're never going to know that, and the metal was never bought, and you never owned it. There's no reason to have proof coins, unless you want a proof coin of every year that goes back to 1986. But if you're putting in $500,000 or $1 million or even $100,000, what is the point of paying 50%, 75%, 100%, whatever it is, more for a proof coin? Because you're not going to get that back on the back end. Just buy current U.S. Mint lineage bullion. Gold eagles, silver eagles. And if it's outside of an IRA for silver, hands down 100% of the time.
In summary, Holter's message is about preparedness and self-reliance. He sees the importance of diversifying portfolios, not only by owning physical metals, but by ensuring those assets are stored in secure and trusted forms, like U.S. Mint coins. As the financial landscape continues to show signs of volatility, Holter urges investors to act now to safeguard their wealth. He views tangible assets like gold and silver as essential hedges against the unpredictable future of fiat currencies and potential economic collapse. His insights provide a roadmap for those looking to secure their financial future. For Holter, protecting against financial repression and currency devaluation is not just about being proactive. It's a necessary step for every serious investor navigating today's uncertain market environment. Stay tuned as we bring you more insights from financial experts like Bill Holter. Make sure to subscribe, like, and turn on notifications to stay up to date with the latest in precious metals and economic analysis.